Hi everyone, welcome back. Today in the sixth video of bonus and right issue chapter, we are going to solve two problems on value of right calculation. The first problem will be from the study material and the second problem will be from the May 2021 RTP. Okay, so let's start with the first problem over here. See, this is practical question number 4 of the ICAl study material, but of our series, this is our fifth problem, considering the bonus problems also which we have solved in the previous videos. Okay, fine. So let's read this here. A company has decided to increase its existing share capital by making rights issue to its existing shareholders. Okay, the company is going for a right issue. You all know what happens in right issue. The company gives a right to existing shareholders to purchase new shares in proportion to their existing holdings, isn't it? And the shareholders will have three options: either to subscribe new shares, renounce, that is sell the right to other persons, or reject the right, isn't it? These three options they have. Yeah, you all know the concept of right issue, isn't it? If you have watched the previous video, the fifth video, which is a 50 minutes video actually, so you will definitely be clear with all the concepts of right issue. Fine. Okay, so the company is going for a right issue. Now let's understand what are the terms of this right issue. Okay, see here, the company is offering one new share for every 2 shares held by the shareholder. What is the meaning of this? The meaning is that if an existing shareholder has 2 shares in the company, then the company will give them a right to purchase one additional share. To purchase one additional share, not free of cost, purchase. Okay, cash flow is involved over here. All right, that's the the condition over here. The market value of the share is rupees 240. What is this? This is the come right price. Technically, this price before the right issue, we call this as come right price, because in this price the benefit of right is included. That is why it is called as come right price. Fine. And the company is offering one share of rupees 120 each. Okay, the company is offering one share of rupees 120 each. What is the meaning of this? This is the right issue price, subscription price, or offer price, whatever you want to call it. Okay, the money which the shareholder has to pay to purchase additional share, that's the price, 120. Fine, is that clear? Under the right issue, if a shareholder wants to purchase, wants to exercise the right, then for a single share he has to pay how much? 120. Is that clear? That's the price. Calculate the value of a right. What should be the X right market price of a share? Fine, let's understand. Now, how do we calculate value of a right? Let's see the formula. Let's just recap what we have done in the previous video. Okay, so value of right formula is come right price, market price before the right issue, minus X right price, market price after the right issue. Yeah, these two values we subtract, we get value of right per share held. Value of right per share held. Okay, that's what we get. But now in this question, and in almost every question, what will happen is, come right price will be given to you in the question. X right price will not be given. It will never be given. You have to calculate the X right price. How do we calculate the X right price? It's really simple. We just take an average. We just take a weighted average. Okay. So see here, X right price formula is really simple. What do we do is we take number of shares before the right issue into come right price. Okay. Plus number of right shares into right issue price divide by number of shares before right issue plus number of right shares. Yeah. These two things are same. These two things are also same. Here you have come right price, here you have right issue price. This is the expanded formula. There are many other formulas actually, but what we do over here is to simplify things, we consider the ratio, not actual amount of shares. Okay, not actual number of shares. No. We just take the ratio. How do we take the ratio? See, come right price will not change. It will remain the same only, come right price. Okay, here it's 240, right? So 240 will come. Where? Here 240 will come right price. And right issue price is how much? 120. Yeah, so 120 will come. Here 120 will come. And then here you will not take the actual number of shares. No, you will just use the ratio. What is the ratio in this question? 1 for every 2. 1 for every 2. So that means 1:2, isn't it? 1:2. So number of shares before right issue. How many shares you should have to get a right? 2 shares. So you will take 2 over here. If you have 2 shares, then only you will be given a right. So number of shares before right issue, according to the ratio, you will take 2 over here. And the number of right shares, how many shares you are going to get under the right issue? It's 1:2 now. So here 1 will come. Number of right shares is equal to 1. Okay, not actual. We are using the ratio over here. Understand? We are taking a shortcut. Divide by number of shares before right issue. The same thing. Here you will take 2. If you have 2 shares, then only you will get a right to purchase one new share, isn't it? So 2 plus 1. Number of right shares, 1 now. So 2 plus 1. That's how you're going to calculate the X right price, which is also known as the weighted average price or theoretical X right price. Fine. Okay. So now let's see the practical, solution. Fine. So see here, it's really simple. Come right price is 240. Right issue is 1:2. The ratio. Offer price or subscription price, issue price is how much? 120, right? So X right price calculation, the same thing what you saw in the formula. It was expanded. It looks a bit messy, but it's really simple. You just have to apply the shortcut. Just take come right price, right issue price. 240, 120. 240 is come right price, 120 is what? Issue price. Yeah, issue price means right issue price, subscription price. It's the same thing. And then what will you multiply? You will multiply with the ratio. Use the ratio. Number of shares before the right issue, that is 2. If you have 2 shares, then only you will be able to purchase one right share. So 2 will come over here and then 1 will come over here, right share. You will get one right share now, 1. Divide by 2 plus 1. Divide by 2 plus 1. Why 2 plus 1? Number of shares before right issue, the same thing. And number of right shares, here also 1. So 2 plus 1. If you do that in calculator, how much will you get? Let's see. 2 into 240, come right price, into the number of shares before the right issue, plus what? 1 right share into this price, issue price, 120. It's equal to 600. Divide by what? Divide by 2 plus 1. So divide by 2 plus 1 means 3. So if you do that, you're getting 200. So what is this 200? This 200 is the weighted average price. This is the X right price. Theoretical X right price. See, it's 200. Fine. So now you will use this 200 in the value of right formula. You all know this. Come right price minus X right price. Yeah. Come right price is given in the question, 240 minus 200 which you just calculated. So that will give you value of right per share held. Come right price minus X right price. Or you can also write come right value, X right value. Okay. It's the same thing over here. So 240 minus 200. So 40 is the value of right per share held. Now, the very important thing is you have to understand the interpretation of this. The calculation is nothing. Calculation is just stupid. It's really easy. There is nothing over here. The main thing is the interpretation. You have to understand what is the conclusion. What am I going to do with this? You all know a shareholder has what? 3 options under the right issue. A single shareholder, every shareholder has 3 options. Either subscribe the shares, subscribe the shares under the right issue, buy the shares fully or partially, yes, or what he can do, he can renounce the right. He can sell his right, not shares, okay, you cannot sell the shares over here. I mean, you can sell your existing shares, but right shares you cannot sell because you have not purchased it now. Directly, how will you sell the right shares? First, you have to purchase now. So that's the first option. The second option is renouncing the right. You're selling of the right. So if you are selling the right to any other person, then at what price you are going to sell? We call that as value of right. Whatever the value is there now of that right, at that price you are going to sell the right. At that price, maximum at that price. You can sell below that also. Fine. So that calculation we do. Now when we do this calculation, value of right, this formula, according to this formula, we do not get the entire value of right. We do not get the entire value of right. No. We get the value of right per share held, because this formula na come right price minus X right price, this is a value of right per share held formula. There is a different formula for entire value of right. For entire value of right, what you have to do, come right price minus what? Minus issue price you have to do. 240 minus 120 you have to do. Then you will get entire value of right. But in the study module, this formula is there. In exam also you have to follow this formula. So here you will get value of right per share held. So now this 40 you have to multiply. This 40 you have to multiply with the existing shares. How many existing shares? See the ratio. Understand the ratio. If you have 2 shares, 2 existing shares, you will get a right to subscribe 1 share, isn't it? So 2 existing shares. So you have to multiply this 40 with this 2. If you multiply, see here, 40 into 2, you will get 80. Now this 80 is the entire value of right. This 80 is entire value of right. Now if there is any person who wants to buy shares under the right issue, but he doesn't have any existing shares of the company. Then what he has to do? He has to go to any existing shareholder. See, Mr. Shareholder, please sell your right to me. Yeah, he will say that. Now, what will be the price decided between them? What will be the price between them? The price will be this, 80, the entire value of right. Yeah, one right. If he wants to sell one right, then at this price. Let's just say that person has 10 rights. If he has 10 rights, then 80 into 10, 800. 800 is the price that they are going to do the transaction. Okay, so here, a conclusion is there. See here, hence anyone desirous of having a confirmed allotment of one share. If there is any person who wants to get an allotment, who wants to buy one share of the company at 120, isn't it? This is the issue price, na? This is the issue price. If you buy the right, then you have to pay to the company how much? 120 per share, na? Because right shares are not free. Right shares are not free. You have to subscribe. You have to pay to the company 120. It's a discounted, but you have to pay, isn't it? But first you have to purchase the right. So that is why this shareholder, any other third party person will have to go to any existing shareholder and will ask, Mr. Existing Shareholder, I want to purchase right from you. So to that shareholder, existing shareholder, this third party person will have to pay rupees 80 to buy one right. Do you understand? That is why, see, this 40 per share, this is not the value of right. This is the value of right per share held. Okay, so 40 into 2. Okay, is that clear? Because a right is equal to 2 existing shares. A right here, the ratio is 1:2 now. So a right is equal to 2 shares over here. For example, let's just say the ratio was 1:10. If it was 1:10, then one right is equal to 10 existing shares. So you would have to multiply this 40 with 10 to find the value of a single whole right. Is that clear? This is the entire idea. You have to get this logic properly. Otherwise, it's useless. You're just calculating this. It's useless. We'll have to pay rupees 80 to an existing shareholder holding 2 shares. Yeah. If a shareholder has 2 shares, existing shareholder, then only he will get a right and he will sell to you at rupees 80. Understood? And willing to renounce his right of buying one share in favor of that person. This means that basically that existing shareholder will sell the right and you will purchase the right from that person. Okay, it's all about right. Okay, shares are not bought and sold here in this case. That's different. Buying the shares and all, that's different. Here the rights are being bought and sold. Fine. So you understood this. Now let's move on to another problem. Now see, here we have another problem of value of right calculation. This problem is from the May 2021 RTP. Okay, see here, Omega company offers new shares of rupees 100 each at 25% premium to existing shareholders on the basis 1 for 5 shares. So from this sentence, what you can understand? From this sentence, you can understand 2 things. The first is the issue price under the right issue, the subscription price, offer price. Yeah, what is that? See, they are saying offers new shares of rupees 100 each at 25% premium. Okay, 100 each is the face value. 25% premium means 25% extra over the face value. So you have to increase this 100 by how much? You have to increase this 100 by how much? By extra 25%. If it is extra 25%, then you have to multiply by 125%, isn't it? 100 is the face value. If you just multiply with 25%, what will happen? We'll get just 25. That's wrong. That's wrong answer. You have to multiply by 125%. 1.25. So 125 is the issue price the shareholder has to pay to subscribe, to buy the right shares. Okay, that's the issue price. How much? 125. And then the second thing you come to know is the ratio 1 for 5 shares. 1 for 5 shares. If an existing shareholder has 5 shares in the company, then he or she will be given a right to purchase 1 additional share. So the ratio is 1:5. 1:5. Clear? Existing shares are 5 and right share is 1. Existing shares are 5 and right share is 1. You will use this in the formula of X right price. Okay, understood. The cum right market price of a share is rupees 200. What is this? This is the cum right market price. It's already given over there. That's 200. Fine. You are required to calculate the X right value of a share and value of a right. Okay, fine. So first we calculate extract value of a share. You all know the formula. What do we do in the formula? The formula is really simple. We just use the ratio existing shares, existing shares. According to the ratio 1:5. So 5 is existing, 5, 5. And then 1 is right share, 1, 1. Okay, like this it will come. Come right price, right issue price. Come right price over here is 200. So 200 will come over here. And right issue price is how much? Right issue price is 125. Clear? Easy? Easy? 5 into 200, 1 into right issue price is 125 divided by 5 plus 1, that will be the 6. Yeah, denominator will be 6. That will be the calculation. See, 5 into 200, 5 existing shares into 200 come right price plus 1 right share into 125 offer price, issue price, subscription price, whatever. Okay, divide by 5 plus 1, 6. If we do this in calculator, 5 into 200 plus 1 into 125, that gives me 1125, divide by 5 plus 1, that is 6. So that will give me 187.5. So it can also come in decimals. Okay, fine. So 187.5 is X right price. 187.5 is X right price. See here, 187.5. Okay, right. After that, we have to do the calculation of value of right. Value of right formula you all know. Come right value of a share minus X right value of a share. Yeah, you will subtract these two things. You will get value of right per share held. Per share held means value of right per share held. If you have 5 shares, then out of that 5 shares, value of right per share held. Per share held. This is what you are going to find. Per share held. 5 are the existing shares. You are calculating value of right per share held. The meaning of that is a single share of a single share. Out of the 5, the value of right per single share, any single share. So that is how you have to multiply that with the 5. Okay, but in the exam you will just leave it as it is. If they asked you something like that, then only you will multiply. Okay, not just like that. Okay, so let's calculate. It's really simple. 200 is come right price, 200 minus X right price 187.50. If you subtract these two, then you are going to get 200 minus 187.50, that's equal to 12.5 per share held. Now let's understand the interpretation. Let's take an example over here, okay, to understand the interpretation of this, because I just want to strengthen your basics properly. Okay, this is there in CA final. Okay, so see here, extra explanation for clarity. Let's just say there is a shareholder, Mr. Akash, for example, existing shareholders. He has 100 shares of this company, Omega company. Okay, let's just write over here, Omega company. Okay, he has how many? 100 shares of this company. So now what will happen? How many rights he is going to get from the company? How many rights? See here, he has 100 shares. The right ratio, the ratio is how much right issue? 1:5. So into 1 divided by 5. So he is going to get 20 rights, which means he will be able to subscribe, buy 20 shares of this company directly. At which price? At not 200. At which price? At 125. At 125, because that's the offer price, subscription price, issue price. Yeah, that's the right this shareholder has, 20 rights. Fine. But now he doesn't have any money to buy the shares and all. Okay, he's in short of funds. So now he wants to renounce. Renunciation of right. I want to renounce my 20 rights. So he will sell those rights, not shares, rights. He wants to sell those rights to any other person. So what will be the price? Now the price he will calculate. It's really simple. The same thing he will do. He will calculate the X right price and then he will calculate the value of right. Okay. He will come to know 12.50. Yeah, 12.5 is the value of right per share held. Now how is he going to use this? Simple. He has 100 existing shares and this is per existing shares, per share held. Now held means what? Existing shares. Held, what is the meaning of held? Held means whatever you have, hold, right? Whatever you have, isn't it? So how many shares he has? He has 100 shares. So 12.50 into 100, that will give him the value of his 20 rights. 100 existing shares into 12.5, isn't it? 20 rights is equal to 100 shares, existing shares. So 100 into 12.5, that will give him 1,250, the value of these 20 rights which he wants to sell. So now when he will go to any person, any buyer to sell the right, then this is the price they will agree upon. Of course, it can be lower than that, but this is the maximum price. It cannot be more than this. It cannot be more than this. Why it can't be more than this? Understand why it can't be more than this. See, it's really simple. 100 shares are there. Yeah, he got how many? 20 rights. So, you know, he can subscribe 20 shares at how much? At 125. So 20 into 125. How much? 2,500 he has to pay, right? If he subscribes. But now if he sell this right, then he will get this much amount of money. But then that other person has to subscribe now. He will not get shares for free. He's just buying the right from this Mr. Akash. He has to go to the company with the 20 rights. See, I want to purchase 20 shares. Again, that person also 20 into what is the price? The same price, 125. Yeah, that another person also, he or she also has to go to the Omega company and purchase the shares, subscribe the shares with the right, isn't it? That is why it's not like, you know, the amount can go above this. No, amount has to remain below this only. Otherwise, that person will be at a loss. He will directly go to the market and purchase the shares. Yeah. What is the benefit of the right? The benefit of the right is that with the right, any person can subscribe to the shares of the company at a discount, 125. Fine. See, the market price is 187.50. Yeah. X right price. Yeah. But the company is offering how much? 125. This is the benefit. All right. So that's it. Okay. You understood this? Yeah. If you have any doubt, then please comment down below. Okay. Or you can also contact me on Instagram. Okay, I will try to reply to you as soon as possible. Okay, so that's it. I hope you have got this. It's really simple. This is value of right per share held. Okay, per share held. Fine. So that's it. This was just an extra explanation. Okay, it's not connected over here. Fine. Okay, bye.